This is Market Pulse for Tuesday, July 21st, 2026, your end-of-day read on Wall Street. Stocks snapped a 3-day losing streak today as beaten-down chipmakers came roaring back. The S&P 500 climbed 0.89% to close at 7,509. The Dow Jones Industrial Average added 385 points, or 0.74%, to 52,225. The tech-heavy Nasdaq Composite led the way, up 1.3% to 25,837. Small caps outperformed, with the Russell 2000 up 1.5% and volatility cooled. The VIX fell almost 9% to just above 17. The spark was chips. A key semiconductor gauge jumped more than 5% as investors positioned ahead of a heavy slate of big tech earnings later this week. To the movers. The standout was Nebius Group, the AI cloud provider, which rocketed almost 19% after Nvidia disclosed a 9.3% passive stake in the company. Nvidia itself gained about 2% after saying its newest chip designs are reaching customers, and chip peers rallied with it. Intel climbed on a fresh round of planned job cuts, and Supermicro jumped in late trading after signaling a rising order backlog. The downside was an earnings story. Danaher tumbled about 11%. MSCI fell nearly 11%, and Genuine Parts dropped more than 7%, and Genuine Parts dropped more than 7%. All three punish on cautious guidance or a miss. Earnings were front and center. General Motors delivered its fifth straight beat, reporting revenue of $48 billion and adjusted earnings of $3.57 a share, well ahead of the $3.20 Wall Street expected. GM raised its full-year profit outlook for the second time this year to $12 to $14 a share on record first-half results, and free cash flow up 78%. 3M also topped estimates. The tougher tape was in guidance. Danaher actually beat, with adjusted earnings of $1.94 and revenue of $6.3 billion, and even lifted its full-year forecast, but investors sold the stock on soft third-quarter revenue guidance tied to weak bioprocessing demand. MSCI slid after missing expectations. After the bell, Capital One and Alaska Air recorded. Now the bigger picture. Trade policy jolted the tape. The White House announced fresh 50% tariffs on a range of Canadian goods, including beer, hockey sticks, milk, and chemicals, set to take effect in 30 days, raising the risk of another round of retaliation. On the geopolitical front, the U.S. carried out fresh strikes on Iran, and Iran's president said the country is engaged in what he called a full-scale war, keeping oil prices elevated. In deal news, snack maker Utz brand soared nearly 90% after agreeing to be taken private by Intersnack in a $2.9 billion deal. And in pharma, Novo Nordisk sued rival Eli Lilly in federal court over weight loss drug advertising claims. Orcontri is engaged in what he called a full-scale war, car and stack. On the analyst desk, Morgan Stanley downgraded Intuit to equal weight and cut its price target sharply to $335. Adobe was also downgraded, with its target trimmed to $240. On the bullish side, Mizuho raised its Nvidia price target to $1,275 while keeping a buy rating, and BMO Capital launched coverage of two biotechs, Insmed and Axum Therapeutics, both at outperform. BMO also downgraded Travelers to market perform, even as it lifted the target. As always, ratings are one input, not a break-in Bitform even as it lifted the target. Now to the risks, because today's rally came with caveats. First, energy and inflation. Oil is elevated near $84 amid the Iran conflict, and higher energy costs feed straight into inflation. That helped push Treasury yields to roughly a 2-month high, with the 10-year near 4.6%. Second, the Fed, while policymakers are widely expected to hold rates steady next week, markets are now pricing in better-than-even odds of a rate hike by September. Third, trade. The new Canada tariffs raise the risk of retaliation. And fourth, breadth. Today's gains leaned heavily on a narrow set of chip names, and this week's big tech earnings will test whether that leadership holds. Sector by sector. Technology led decisively, driven by that 5% plus surge in semiconductors and a nearly 2% gain in the Nasdaq 100. Energy was firm as crude prices pushed higher. Autos and industrials got a lift from strong results at General Motors and 3M. Small caps broadly outpaced large caps. On the weaker side, healthcare and life sciences names lagged, dragged by Danaher, and pockets of financials came under pressure after MSCI's miss. In commodities and macro, West Texas Intermediate crude rose about 2.5% to roughly $84.50 a barrel as the Iran conflict kept a bid under energy. Gold held firm, up close to 1.7% to about $4,085 an ounce. Bitcoin added about 1.7% to just over $66,000. And in bonds, the 10-year Treasury yield pushed to around a 2-month high as oil-fueled inflation concerns took hold. A headwind markets will weigh against next week's Fed decision. Looking to the week ahead, it's all about big tech and the Fed. Wednesday after the close brings the main event. Alphabet, Tesla, and IBM all report. The market's first real read on whether heavy AI spending is turning into growth. Intel and RTX follow later in the week. On the data side, watch existing and new home sales, weekly jobless claims, and the flash PMIs. And looking a bit further out, the Federal Reserve meets July 28th and 29th, with a rate decision, though no new projections, next Wednesday, with second quarter earnings growth tracking near 25%. Expectations are high. Wednesday after the Knight percent, expectations are high. That's your Market Pulse for Tuesday, July 21st. If this rundown helped you make sense of the day, subscribe and turn on notifications so you never miss the close. We'll see you at the next bell. And as always, this is not investment advice. Trade safe.